Hello everyone, EduTap welcomes all the RBI Grade B aspirants and we hope that your preparation for RBI Grade B is going well since the exam is just on the anvil. We hope that you have already seen our analysis video for various phase 2 sections like ESI, Management and Finance, and our video on strategy for RBI Grade B also, and you would have already benefited a lot from that. A lot of students have been coming to us and asking questions like how to prepare on the numerical section, which all topics to pick up and which all areas in those topics to pick up, how much practice should they do. Well, the curiosity is understandable because exam has become technical over the last year, and this year also we expect a lot of numericals. Well, to answer all those questions, we have prepared this analysis video on numerical. It only caters to the numerical part of the FM section. The points which we will be discussing in this video are: first, we will let you know about what was the weightage of numerical in 2016, topics from which numerical were asked, what can be the new possible topics this year, and what is EduTap offering with respect to the numerical part. Well, before we present our analysis, we must caution you that the analysis is based on memory based. We conducted workshops with the RBI Grade B aspirants who appeared last year, and since the paper is not sent out by RBI, this all is memory based. Well, this slide might be familiar to you. So the weightage of finance in 2016 was almost about 53 to 55%. So out of total 100 marks, finance contributed around 53 marks in the FM section. In the next slides, we will discuss the analysis only on the numerical part in the finance section. For detailed analysis on the finance and management section, you can see a separate video which has been which is on our YouTube channel. Now, what was the weightage of numerical in the 2016 exam? Well, you can see in this slide that out of total 53 marks, around 19 marks worth of numerical were asked. There can be one or two mark here and there, as we already said that this is all retention based. So 19 marks is a very huge contribution out of total 53 marks from which finance paper was asked. Now, what were the topics from which numerical were asked? This is a very important slide. This will give you an idea of what is being asked in the RBI Grade B exam with respect to numerical. So you can see here from the bond yield and pricing, 6 marks worth of numerical were asked. There were 3 questions of 2 marks each. And then from operating leverage, there was 1 numerical of 2 marks. From EBIT, which is earning before interest and taxes, which is a part of income statement, there was 1 question of 2 marks. By question, obviously we mean numerical. Then there is BEP. BEP means break-even point. There was 1 numerical of 2 marks on the break-even point. Then financial ratios. Yes, I think by now everybody knows it that financial ratios contributed around 6 marks worth of numerical in 2016 RBI Grade B exam. And the last one is time value of money. Here only 1 numerical of 1 mark was asked. So except time value of money, all the questions which could be said of numerical type were of 2 marks. Now, the important point to note here is, here you can see a red circle, that all the topics except bond yield and bond pricing are not part of the syllabus directly. You will not find them anywhere in the syllabus if you scan through the syllabus. Now, out of these 5 topics which can be said out of syllabus, time value of money is a very basic topic. That is a very basic topic of finance. So you cannot attempt bond yield and bond pricing without knowing time value of money. So in a way we can say that time value of money can be related to bond yield and pricing. But the other 4 topics, which is operating leverage, EBIT, BEP and ratios, these are part of financial accounting or cost accounting, and they are nowhere mentioned in the syllabus. But I think this year people have already taken cognizance and are already preparing for that. So this slide tells you what all was asked in the last year exam. Now the question is, are these topics enough? Can we just prepare on these topics and feel good for the exam? The answer is no. But why? Well, RBI is always in a habit of giving you a surprise. So we think this year there again be a surprise. No doubt the topics from which numerical were asked last year are important topics, and this year also there would be numerical asked from some of the topics, but maybe not all of them. So there might be numericals asked from some another topics. So what we have done is we have done analysis in 2 parts. First, from the topics from which numerical were asked, we will let you know what are the all possible areas under those topics from which numerical can be asked in the coming year. And then we will also see what are the new topics which are altogether new. By altogether new we mean that there was no question or no numerical put from that topic last year, but this year there is a possibility. And when we present this analysis on the particular areas in the topic, on the new topics, see, it's all a guess, but that is an intelligent guess based on the RBI exam patterns, based on the gut feel, based on the experience. So we cannot guarantee that numericals would be asked only from those topics, or maybe this year only 10 marks worth of numerical can be asked, or maybe it can go to 30 also. But on a whole we feel that these are the topics which one should cover to feel comfortable for the exam. Even RBI gives you a surprise, that would be a surprise for all, and you would be better placed than everybody else. So what are all the important areas in the existing topics? Existing topics means from the topics from which numerical were asked in 2016. So the first one, or at the top of the list, is bonds. Well, that is a favorite topic, and due to decrease in interest rates last year, they become even more important. So within the bonds, the important topics are bond yield, bond pricing. These were the topics from which numerical were asked last year. But apart from that, you should also look to prepare for yield to call. Yield to call means that the yield till the point bond was called. It was calling a bond means it was not allowed to go till maturity. Duration of bonds, this is a very important topic, and holding period return value invest in bonds. So these are the 5 very important areas, and there can be 1 or 2 more, but if you cover these, I think you are good to go for the exam. The next one is time value of money. Last year only 1 mark worth of question was asked. This is a very basic topic, and we do not expect more than 1 or 2 marks worth of numerical this year also. The basic topics which you or the basic areas which you should cover in this topic is simple and compound interest, future and present value of cash flow. The last year numerical was related to simple and compound interest. Apart from that, you should also look to have hands-on on future value of annuities, present value of annuities. These are very important. Annuity means when the same cash flow is happening for a certain period of time, like you invest rupees 5,000 every year for next 20 years. That is called an annuity for 20-year period. And the last one in under time value of money is effective interest rate. Here you would have to calculate the interest rate when you would be given the future value and the present value. Well, income and balance sheet. Last year there was question asked from EBIT part, which is a part of income statement. EBIT stands for earning before income and interest and taxes. So you need to learn how to calculate EBIT or EBIT, earning before interest, depreciation and taxes. Calculating depreciation is a very important part of income statement and balance sheet. Depreciation is nothing but a decrease in value of an asset over a period of time. Suppose you buy a car today and after 5 years its value will automatically decrease, right? Calculating the working capital from the balance sheet, this is also an important concept. And you should have a good knowledge or understanding of how to analyze the balance sheet with respect to asset, liabilities and equity. Income and balance sheet, or rather income statement and balance sheet, is a very vast topic. So one needs to have a good conceptual understanding, and I'm sure once you have a good conceptual understanding you can crack any numerical, because RBI is asking very basic numericals. They are not asking you to make a complete income statement or a balance sheet in the exam. So there might be 10 values given and one missing value given, and one missing value you have to find. So once you have clear understanding of the concepts, you can easily do that. Well, another important topic is break-even point and leverage. This is part of cost accounting. Again, not mentioned in the syllabus. Last year there was a numerical on break-even point. Now, break-even point has various important areas which you need to work on. One is break-even point in sales volume. Well, first off, I think let me tell you what is break-even point. The break-even point is the point where you neither make a profit nor a loss. Suppose you are manufacturing shoes and you have certain fixed cost, that is rent of a industry you are giving, and then you have a variable cost which is cost per shoe, and then you need to analyze that after making how many shoes you will neither make a profit nor a loss. That point would be break-even point. Now, break-even point can be in the sales volume, which means that the break-even point would be a volume of 500 shoes you are selling. Break-even point can be in the sales value, which means that the break-even point would be those 500 shoes into value of each shoe. So that would be your actual revenue. So break-even point in terms of revenue. Then contribution margin and ratio. Contribution margin is nothing but the difference between selling price and the variable cost. Margin of safety. Margin of safety is your volumes which you are selling above the break-even point. So if the break-even point says that one has to sell 500 shoes to make neither a profit nor a loss, and you are selling 600, then it means that you have a margin of safety of 600 minus 500, which is 100. And last but not the least, the operating and the financial leverage. This is very important. Again, last year there was a numerical asked from this part. Operating leverage is nothing but it tells you that how your increase in sales increase your profits. Because once you have fixed cost and if your volumes increase after that, it means you are leveraging your setup. So operating leverage will tell you that how much profit would increase when there is a certain percentage of increase in volume. And financial leverage is based on how much debt the company is having. And the combination of operating and financial leverage is called combined leverage. And the numerical last year in the exam was on combined leverage. Financial ratios. Well, I think by now everybody knows it. There are a lot of people asking us about the financial ratios. They are very important and they are plenty in the books on the net. You cannot say that there are 9 to 10 financial ratios that you can study and you are done for the exam. There are more than 50 financial ratios covering the areas like liquidity ratios, solvency ratios, profitability ratios, etc. And please do not focus on the common ones or the important ones, because last year the question was on a very uncommon ratio which is called capital gearing ratio. So read all the ratios which are available in the books on the net. Do not leave anything. We again expect at least 3 to 4 marks worth of paper from financial ratios this year. Well, till now we have covered all the areas in the existing topics from which numericals were asked in 2016. Now we will discuss about the new possible topics from which numericals can be asked next year. And really there is a possibility, I mean this is not just a guess, but we feel that there is a possibility that this year there would be numericals from some of these topics which I am going to mention now. First one is the equity markets or the equity valuation. It's similar to bond pricing or the yield. The difference is that this concept applies to stocks. So the first one is concept of PE ratio. PE ratio means price of a share upon earning per share. The second one is the dividend discount model, which finds the value of a stock based on the dividends which stock is going to produce in the future. Third one is the Gordon growth model. This is a very familiar model in the financial textbooks, very important for the exam. And the last one for the equity is valuation based on earnings. So this tells you how the stock needs to be valued based on the profits the stock is making. The next one in the line is risk management in banks. Last year there was an important question on beta from this section, but it was not a numerical. But this is very important, specifically given the emphasis RBI is giving on the risk management after the NPA issue. So calculating beta and alpha of the asset is a very familiar thing for the people who are graduate in finance. This is an important and easy topic. And the second one is numerical on the capital adequacy ratio. The next one is future and options. Last year there was just one theoretical question on the derivatives, but future and option is more of a technical topic, and most of the times I think exam setter would set 1 or 2 numerical from this section. The important concepts for numerical to be covered in this section are pricing of futures and options, profit and loss in futures and options, and the time value of options. This covers the whole of future and options with respect to numerical part. This topic is very easy. If you start reading, read with patience. Numericals are very easy. They are just concept based. You have to do plus and minus. No big formulas, no filthy equations. Well, now risk and return on a portfolio. This is a very technical topic, and most of the investment bankers are familiar with this topic. It would not be easy to grasp this topic, though it is an important one, but we would say that you touch this topic only after you have covered all the topics, because this topic is going to take time. It cannot be finished in one or 2 days. The important concepts which need to be covered under risk and return on portfolio are risk and return of a single security or a portfolio. By portfolio mean that you own a combination of securities like shares of Reliance, TCS, Bajaj Auto, Maruti. So that becomes a portfolio. The risk and return of a portfolio is a different thing from a single security, because in a portfolio the returns of 2 stocks fluctuate with each other, or they move in different direction. Suppose the share of Reliance is moving up today, but the share of TCS is going down. So that reduces our risk, because two shares are always moving in different directions. Such a concept is called covariance. Then again, calculating beta of a security, the same what we discussed in the risk management in bank section. Then a required rate of return as per the CAPM model. CAPM model is capital asset pricing model, which tells you that what should be the required rate of return on a security for it to be included in a portfolio. Well, now there are some possible topics from which numerical can come next year, but those are unimportant ones. There is very less probability as per the intelligent guess, but then again, as we told you at the start, be open to anything in the exam. Those topics are, first one is mutual funds. There are some calculation based things in mutual funds, though it is more of a theoretical topic. And then swaps. In swaps, actually the topic is important, but the numerical would be a lengthy one even if it comes. So I don't think RBI, which is in practice of setting very basic numericals as per the past year analysis, will set a very tough numerical like on the swaps. But I think this is again more of a theory based numerical. So if you are very well versed with the swaps theory, and you practice just 5 to 10 numericals before the exam, even if a numerical in the exam is there from the swaps, you would be able to crack it, or at least make an intelligent guess among the options. Now the important point comes that what is EduTap offering with respect to numerical part for the exam. So the point is that we have done a thorough analysis, as we have shared in this video. You already have good idea of what is need to be read, which all topics and what all areas from those topics. And we are extending our course based on this analysis only. So we would be giving you complete coverage on the existing and possible topics which we have just discussed. Each of these topics would have theory and numerical, so that you read the theory first, understand the concepts, and then only move to numerical part. There would be more than 500 numerical for you to practice and gauge the level of your preparation. All the numericals are solved step by step in our concept notes. There would be shortcuts explained in the notes for some complex numericals which have lengthy calculations, like for bond yield. And we will be giving you huge variety of numerical to practice, so that there is a lesser probability of you having a surprise in the exam. Now the question which most of the people ask us is, will 500 numerical be enough? Well, the answer which I tell them is that it should be. Why? See, you can do even 5,000 numerical. That depends upon you, how much time you have. But is it worth it? Do you have that much time? It's not about the quantity, it's about the quality which we are talking about here. So you should focus on selection of the topics and the areas which you need to cover. And then the most important part is retention. RBI Grade B exam has a very vast syllabus. You will read thousands of pages in 2-3 months. The key lies in retention. And the third point is variety. It's not that you read one topic and then solve 100 questions on that topic, but without a variety. Suppose you do numerical on bond pricing. You do 50 numericals on bond pricing. But in exam there is a question not on the bond pricing, but finding the interest rate or the coupon rate. And the bond price is already given. So you need to have variety. So keep these 3 points in mind: selection, retention and variety, while preparing for the numerical part. Well, by now you might have got confused that we are only talking about numerical part, and what about the management, ESI and the theoretical part of the finance? Well, numerical part is already part of our main course. There is no separate course for that, and you will get even focus on management and the ESI and the theory part of the finance section in our course. And if you have any queries with respect to our course, you can visit our website www.edutap.co.in. You can visit our blog www.rbigradeb.wordpress.com. Our blog has plethora of information, and we also keep sending updates to our blog to all our subscribers and to all the other aspirants. And for any query, you can call us at 8146207241. Just note down this number. If you have any query, irrespective of whether you are a subscriber of our course or not, just let us know. We will be happy to help you. Well, I would also like to take this opportunity to tell you about the new features. We have already launched an app. So you can download this app and you can read or prepare for the exam on the mobile anytime, anywhere, especially for working professionals. In office, you cannot open certain sites, or you do not want to open because other people can see that who are sitting behind you or adjacent to you. So this is a very good option that you can read all the course content on the mobile, even attempt MCQs. So everything is available on the mobile. Well, last, I'll thank you for spending some time and listening to our analysis. Hope this helps you. And again, if you have any query, just let us know. Call us at the number mentioned in this video and we would be glad to help you. Bye for now.